But Chainlink's bucking the trend here, Andrew. That's your top gainer today. Why are we seeing divergence when everything else is selling off?
Alex, Chainlink's outperforming because institutional demand for Oracle solutions hasn't dried up the way it has for Layer 1 networks. Cardano and Avalanche are getting hit by broader macro pressure. The question is whether this holds into the close.
Fair point. Though Avalanche at 639 still has some technical support above 6. Where do you see the real capitulation level for Bitcoin if this selling continues?
62,000 holds the narrative. Break that decisively and you're testing 61. Until then, this is profit taking, not panic. Positioning in crypto is completely inverted this morning. XRP shows nearly 80% long exposure, Solana above 70. That's dangerous money on one side. We're seeing retail chase momentum while the structure underneath is fragile.
But Bitcoin's different, 62% longs. Why aren't we watching that ratio as the real risk? Ethereum and BNB both north of 68% too.
Alex, you're right that Bitcoin looks less crowded, but XRP's skew is almost 30%. That's the outlier that matters here. When conviction gets that lopsided, reversals don't warn you.
Fair point. Still, if retail's long on all 5, what's actually holding these positions up? Is it real demand or leverage stacking?
Leverage stacking, mostly. One catalyst and this unwinds fast. Gold up 0.5% to 44.42, silver climbing nearly 0.5% as well. This is a dollar story. Softer currency makes commodities cheaper to buy globally, and right now that's supporting metals ahead of any rate decision.
But the Russell is up 0.25% while equities are basically flat. Doesn't that suggest investors are rotating into reflation trades rather than pure dollar weakness?
Alex, rotation into small caps doesn't contradict what we're seeing in metals. Both happen when real rates compress. The question is whether that compression holds if the Fed signals they're done cutting.
Fair point. Silver's outpacing gold though, up nearly 0.5% versus gold's 0.5. Industrial demand thesis or pure leverage?
Leverage. When rates fall, silver moves harder. Watch the spread. If it widens, inflation's winning. If it tightens, we're looking at a growth scare. We tested this method on Bitcoin across 122 intraday trades and 41 swings. The intraday trades won 23 times out of 122. That's a 22% hit rate, but it still lost 27.75 risk units total. The swing trades were worse. 1 win in 41 attempts. 3% hit rate, down 31.5 units.
Andrew, those numbers assume the method works in hindsight. What breaks it in real time? The intraday setup had a 2.3 reward to risk ratio, so even at 22% winners it should not have bled that badly unless execution failed or the samples were cherry-picked.
You're right to push back, Alex. The issue is the method assumes a trend persists. It doesn't account for reversals inside the window it's measuring. On swing trades the average reward ratio was 2.5 but losses outnumbered wins 7 to 1. The ruler set doesn't filter for when the trend is exhausted.
So the rules work when they work but have no break. No exit signal that says the premise is broken before you're already down.
Precisely. The method returns a hit rate it cannot sustain because it lacks a mechanism to say stop. That's the difference between backtested and live. Realized volatility is running hot across the board. Bitcoin and Ethereum both sitting around 24%, but Solana's pushing 30%. That gap between realized and what the market's pricing in tells us expect moves of around 1 to 1.4% over the next few hours. XRP is the outlier, calmest of the bunch at 22% realized, tightest range too. Ethereum's the story this morning. Open interest up 1.7% while price climbs, and that's new money pouring in, not a short squeeze. 4.3 billion in notional value backing this move. The smart money isn't rotating, Alex, they're adding.
But Bitcoin's different. Open interest up almost 1% on 13 points.
Ethereum's the story this morning.